Hey everybody, welcome to this webinar. This is Shane Smoleny from Wolftrader Futures, and this is going to be a webinar today talking about the portfolio analyzer. So I'm just going to do a few sound checks here just to make sure everything's going okay. And once we get everything cleared, if you can hear me and see me okay, we will be started shortly. So I hope everybody's having a great weekend. We got Thanksgiving coming up, so the holidays are coming up. We have generally positive seasonals for the markets, but there are other things going on in the background which are making this market especially interesting right now. So this was an incredible week. In fact, this was a life-changing week, I think, for Wolf Traders, for the service, for the you're going to see with the portfolio, with the trades. This was the single highest grossing week of profit in the history of Wolf Trader in terms of the platinum trading section, in terms of the fast fed big runs. We have had this was a life-changing week. So I'm going to talk to you about some things today with the portfolio. And first of all, before we get started, I want everybody to know that everything that we talk about here is documented and verified. None of this is stuff that's made up or back test. This is all trades that have been made with the service, documented in the newsletters, documented in Twitter. So I know it's going to be shocking for you to see some of these statistics, but I just want you to know these are all real. These are all posted. So stay tuned for that. All right, so contact info today is going to be email here, shane@wolftraderfutures.com. And then the website is www.wolftraderfutures.com. You can always reach us here. There's a chat function. YouTube is Wolf Trader Futures, which you are on right now. Twitter, I highly recommend that you subscribe to that. I'm trying to give more of a look and feel to the private Twitter, which is on the Platinum. I don't post, obviously, all the content, but I try to kind of mirror what's going on. Sometimes if we're deep into a trade, I'll post that. Like I've been posting some of these big runs trades. This week, the profits have just been literally falling onto our lap. It seems like every trade is almost a huge winner. There was a couple of small losses this week, but we've had some huge runs this week. So I'm very happy with the way that that's going. But if you want the look and the feel of how the rhythm goes in the day, I highly recommend you subscribe to Wolf Trader FUTU1. You can check that out. Now we do have multiple services here that we talk about. We have the S&P newsletter. We have the metals, energy, currencies, cryptocurrencies. I will be adding a grain and financials. I'm going to talk about that. I added a new closing bell to this. So for those of you who are gold subscribers, you have grains and financials closing bell now, which we'll talk about. The Uranian letter, the stock ETF service, and then all of these is the gold membership. So if you're a gold member already, then you just got this added on. It comes with it. So you don't have to do anything. You automatically get it. But we're covering multiple markets here. So I'm going to start talking today about the Fed juice and the double lunar cycles in terms of profit histories and profit graphs. I'm going to show you how to combine these into a portfolio. And that's really important because a lot of times people ask me, they say, Shane, there's so many signals. What do I do? How do I combine this? So today we're going to focus on combining signals and then what did it look like based upon the history of it. And we're going to continue to do this. And I'm going to have multiple portfolios available for you. If you're in a metals, I can say, here's the copper, silver, gold portfolio for Fed use. I can say this is the double lunar portfolio. So you can see if you traded all of those as a unit, that's what it would look like. Over here, I'm going to get out of the way so you can see this. We have the Twitter live. Now that's different than the free Twitter. That's the live Twitter where we post all day. The Fed Use 3.0, the trade services, option spreads. We had been doing those. We haven't been in the past few weeks, but I think we will be coming back to those soon. The fast Fed big runs. This is the one here. This is the feature. This is the big guy. This is the one that I think has the most potential going forward in terms of short-term swing trades. If you want hard trades with stops and limits, this is the service. Easy Timer, Pairs Trader, and then of course all future services are grandfathered in if you're a platinum member. So that's kind of the structure of how we work here. And like I said, if you're a gold member, you automatically get that grains and financials closing bell. It's probably going to become a separate newsletter. I already had those charts posted. It's not like I'm doing new charts. Crypto, we have Bitcoin, Ethereum, Ripple, Cardano, and Litecoin. We added Cardano this week. I'll talk about that. So check it out. Go over there and check it out. So the disclaimer is that commodity futures involves a risk of loss. All of this has a risk of loss, even though I'm going to show you these charts today of these portfolios. There are huge drawdowns in addition to risk of loss. So you could be in a portfolio, it could have huge drawdowns, it could come back, it can go up and can go down, it can rise and fall. So just understand that. This service is a supplement to the book that I wrote with Larry Pesavento called A Trader's Guide to Financial Astrology. This is not my firm, Trading Ridge. Trading Ridge is my firm where I'm a registered CPO and CTA with the NFA, CFTC. This is separate. This is just a newsletter to put out to people. And so, yeah, everybody gets the same newsletter. I'm not managing anybody's accounts here. So just to let you know. All right, so the data used in the creation of astrological planetary data is reflected in underlying prices. So everybody gets the same data at the same time. Wolftrader is a combination of the Fed and cycles, so be careful about fragments. It could look one way 1 minute, and then the next week it could look totally different based upon what the Fed is doing. And we've seen the Fed acting at really, really fast clips lately. So it's just important to understand that. So the double lunar cycles are posted at the beginning of the month, but the Fed juice can change. So just be careful about that. Profit graphs history. So this is a disclaimer. These are real signals posted to subscribers. This is not a back test. This is not hypothetical. It's hypothetical in the sense that I posted it to you, but it's not made up. It's not just a back test. These were posted and documented in newsletters and time stamped on Twitter. Okay, so all of these are time stamped. So everything that I'm showing you is stuff that happened. Like it happened. In other words, it was published. I guess that's the right word to say. This was all published. So we never share your personal data. I don't sell your data. I don't share your data. I don't buy data. If you sign up for a newsletter, it's because you signed up. You can unsubscribe at any time. You have to physically sign up, so you're not going to get some email just randomly if you didn't sign up or anything like that. Terms of service, my main thing is that you understand the risk involved here. This is risky stuff, particularly if you over leverage or you don't protect yourself with appropriate risk protection. And that can be many ways. I mean, it could be trading small, it could be using stops, it could be using options as protection. It's just there's many ways to talk about this, but if you over leverage, the risk can be tremendous on this. Okay. All right, so let's talk about news and events here. So the user guide is started on the website. I have questions and answers there. The solar cycles were updated. Solar cycles are annual cycles that you might see like in an almanac. They're updated for all the symbols now. So I updated them a couple weeks ago, but some people were asking me about this, that some of the newsletter doesn't necessarily match. And a lot of that has to do with the fact that I've just updated these. So check these out on the website, and that will be useful for you. All right, so moving along here, streaming crypto. So I have streaming crypto now, so I have more data. So this is why I've redone the solar cycles. We have Cardano online now. I'll show you that. So Cardano is doing very well. And yeah, so we've got the Fed juice up on Cardano. Hopefully you guys are able to hear me okay. It looks like I've got a few streaming issues going in and out here, but it seems like my internet is okay, so I'm going to keep talking here. Next news and event here is the hottest cycles. We've identified the hottest cycles now. I'm using a heat map to find the most recent cycles. They've been serving us very well with S&P, gold, and Bitcoin very well. This is to just, if you have to isolate one cycle, this is the one that we're looking at. The fast Fed big runs had the best week of profits in the history of Wolftrader. This was the best week of trades we've ever had. We had a couple of really small losers, but most of these were ripping off huge gains. And so that's a good sign, because last year we had started out the fast Fed 2.7, and it's gone through a lot of changes and iterations to get to the point where we're at the big runs, and it's starting to look even better than it did last November. So I'm really excited about that. It was almost shocking how many trades were making money this week. It was almost like you wouldn't believe it if you weren't there. I was trying to post it on the free Twitter. It was just one of those weeks where, of course, you can't have weeks like this all the time, but it literally seemed like every trade just turned into this huge run. And that's why we call it the big runs, because we're trying to get these huge runs, not just little runs, but not 10 or 20-point moves on gold, talking about like 90-point moves on gold, things like that. So we had our first Bitcoin trade was a winner, and we'll talk about that in a minute. Oh, and then the new closing bell here, I talked about this for Grains and Financials. So if you're a gold member, you automatically get that new closing bell. Okay, so and it's going to make sense why that's important in a minute, because I'm going to talk about the actual performances now. Profit graphs. This is the big focus of what we're talking about today. I've taken these profit graphs and I'm putting them into a portfolio. So now we have added for copper, gold, and silver, updated. This is going to be available, but the portfolio manager is the big story of the week, in addition to the big runs. The big runs was the big story for the platinum subscribers. But in terms of everyone else, this portfolio manager is now added. It's a software that helps us visualize and combine and merge trades and signals. So these statistics will give us combined profit history curves. Okay, I'm going to talk to you about that. Everything that I do here is to create portfolios, for large funds. That's my whole focus here. I'm for larger funds, larger portfolios, diversifying with many symbols to smooth out the profit curves. Okay, so I do have the big runs, which is kind of sniper trades, like little, swing trades here and there, but really my focus is on creating portfolios. So you're going to see today where this is all coming together finally. I'm finally at the point now where we can bring this together. And then each week now, we're going to be able to talk about how these are doing as a whole together combined. That's the focus. So sometimes you can't see it. When you look at the individual graphs, you can't really see it. But when you look at the whole profit graphs, you'll start to understand the power of what we're doing here and why I've been pushing so hard for these longer term swing trades and automated trading systems, because now you can have a portfolio where you're always in the market. Okay, the double lunar cycles are doing well. November newsletters are out. Obviously, we're getting late into November, but check them out. You can get a 7-day trial. And then I talked about streams on the website. I'm still working on that, but eventually, and I really feel strongly about this, that if we get really big market moves, like if the S&P really does start to sell off here pretty strong, I'd like to be able to get on and do live streams with you guys and kind of trace that down and trail the stops down and things like that. So that's kind of my focus there. Like if we get really into some of these bigger moves and more dramatic days, that I can kind of log on with you guys and say, okay, here's what we're looking at. Let's try to follow that down. So new closing bell for financials. So here's where you find this. If you are a gold member, the closing bells are listed here. So now there's one that says grains and financials closing bell. So right now what I have on the grains and financials, I just have corn right now, but I'll probably add soy to that. I have a bunch of symbols that I'm in the pipeline here, but corn, 10-year note, and then the euro dollar, which is technically a financial. These three are grouped together now. Maybe I'll add the 30-year, so we can have something like the 10-year and the 30-year corn and soy or something like that. So yeah, so that's what's going on with that. So if you're a gold member, you can check it out there. Big runs, guys. This is exceeding my expectations. Um, it's crazy. Like it's crazy. The trades that we had this week. Um, I don't, obviously every week's not going to be like this week, and I'm not going to even throw the numbers at you. If you're the platinum subscribers, you know what we're doing. But it was a good week. It's a good sign, I guess is the right word, that we're building and we're improving each week. So my goal is always to be improving for you guys. I tell you guys that all the time. I want to be better this week than I was last week, and I think we are substantially better this week than last week. And I think the big runs just had a big week. And I'm going to show you a few trades here. This was the gold trade, and I kept saying to everybody, here we go again. Every time the trade goes on, it was just like this huge gain would rip off. So gold starts with this big run down. Bitcoin starts. We had two Bitcoin trades this week. This is the second one. We ripped off that first huge gain on the short side, and then this one these are still open. I'm still bearish on multiple markets right now. Oil, here's another one. It just seemed like it was almost unbelievable. Like I said, if I wouldn't have documented this and told everybody and everybody wouldn't have seen it, it just doesn't even seem real. But they were real, and they're still out there. So yeah, so this was just crazy. I mean, it was just like it was a good week. All right, so those were the big runs. That's available in the Platinum service. Previously, this was the FastFed 2.7, and it became the 2.9, and then it's the 2.9 big runs. So it's the FastFed 2.9 big runs. But if you take a look here on these brackets, the way that this works is This is the trade. This is the short signal here. Trade goes into profit here. Here's the target, and I'm going to explain to you why there's two targets here, just so you can know. This is the original target over here, but what I do, because there is an error involved with this, it's a resolution problem, I trim about 10% off. So that's what this second line is here. So a lot of times I notice that because there is some type of an error in there, sometimes it would go down and hook up. It would just miss the profit and hook up, or same thing on the stop. It would go up and hit the stop and then hook back. So I trim in about 10%. So that's why there's two lines there. But anyway, so that's what's going on there. But let's talk about the portfolio analyzer today. So this is the focus. This is the focus of years and years of work of where I've wanted to get to. And this is the point where we're finally at here. This is really what it's all about. Okay. So if you're a wolf trader, this is what it's all about. The portfolio analyzer. So what does this do? This looks at the profit and loss graph detail of statistics of individual symbols. So not such a big deal. A lot of people show profit graphs. I've started to show those last week. Okay. But we can also look at detailed statistics, which I'm going to show you in a minute. Keep in mind, these are actual signals posted to subscribers. We can combine them. This is the power of this program. It helps you visualize. You can merge data together so you can see how they acted as a unit, right? So that's the whole power of this. We want to see how everything works as a unit, not just necessarily how these work alone. Because you get into a problem which I call chasing rainbows regressions. When you look at a single profit graph, you start chasing rainbows. You say, well, I'm going to go to that profit graph because that one's the best performing. And then it pulls back because naturally everything regresses back to a mean. So the problem is if you try to chase around different profit graphs, you get into this problem where, and this is very common, where you'll think you're choosing the best system, and then that's when it goes into drawdown. So by having a portfolio, you don't have that problem. You don't have the chasing rainbow regression. That's what I call it. Like this is very common. Like on trading systems and auto trading services, people go and they look for the best performing system, and then that's the one that goes into drawdown because eventually they all regress. So by having a portfolio, you don't have to worry about that. You just take all the trades. So this is long and short positions. These are always in. Okay, so when you think of a portfolio, like a normal portfolio, like an investment portfolio, you're like, I own Google, I own Broadcom, I own Tesla. That's my portfolio. I'm long. This is a portfolio where you're following the signals, long and short, long and short. The trades could last a day to 2 weeks to a month. But you're always in. It's always long and short. And that's why this is so powerful, because anybody can catch a bull market and get lucky. Okay, so there's a phrase that says don't confuse brains with the bull market. So you could pick great stocks with great balance sheets, but if the market's going up, they're all going to go up. The thing about this that I want to emphasize is these are long and short trades. Every single trade goes long and short. Even in a bull market, it's going to go long and short. So the thing about this is that if you can make money going long and short, it doesn't matter what the market does. And so I want to just point that out because I know there's people with portfolios now that are crazy because we're in this bull market and everybody's confusing that with some kind of savvy. And now some people are good investors. I'm not saying that. There's the Warren Buffetts out there. There's people that are really good at analyzing balance sheets. And I'm not saying that that's not there. But what I'm saying is if the market's always going up and you're always long, that's why you're making money. The point about this is that this is long and short, and so it doesn't matter what the market does. Okay, so we trade small and we diversify to reduce risk. Okay, so multiple symbols smooth out the profit and loss. So you're going to see there's going to be certain profit graphs. They don't look that good, or one's kind of bumpy and then it goes up, but when you put them together, they become smooth. And so this is why the portfolio concept is so important. We don't want to chase the rainbows. We don't want to get into regression, what I call the rainbow regression. You don't want to go after that one trading system that's doing really, really good because all of a sudden you start trading it and then it goes into drawdown. This way you're always in on all the systems all the time. That's the whole point. That's the whole point of this. Okay? So think of it as a whole trading unit, and the whole is greater than the parts, the sum of the parts. Because each system goes into drawdown at different times. So it smooths things out across time. This is guys, this is what I've been working on. This is it. This is it. We're finally at this point. And from now on, it's just going to get better because we're going to keep adding more and more. I just have a few symbols here to show you today. These are samples, but if you're a subscriber, you're going to be able to say, I want to look at the portfolio that's copper, silver, and gold Fed juice. I want to look at the portfolio that is S&P bond and Bitcoin double lunar, and you'll be able to see that. Okay, so that's where we are. This is huge. Okay, so like I said, I really think that we made a quantum leap this week. It's a huge jump this week in terms of for the platinum subscribers, for those big runs trades. I mean, that thing it's doing well. But this is for everybody in every service. If you're in the metals, you can directly apply this now. If you're in Bitcoin or crypto, you can directly apply this now. If you're in the S&P, you can directly apply this now. Okay, so I'm going to show you this. All right, so here's what we're going to do. I'm going to look at 3 different symbols. So we're going to look at copper, silver, gold, and then I'm going to show you the individual profit graphs, and then I'm going to show you what they look like together. This is trading 1 micro contract for silver, 2 micro contracts for gold, and 1 micro contract for copper. Okay, there's not that much buying power involved in this. This is real. I'm not making this up. I know you might look at this and say there's no way. This is what happened, okay? And you're going to see what I'm talking about when I show you the difference in the graphs. When you put them together, they start to look much better. Okay, so first graph here, this is copper. So this is copper Fed Juice 3.0. I'm going to zoom this down a little bit. So doesn't look that impressive, right? It has a good time here, probably a year, where it doesn't make money. And then all of a sudden, it starts to make money. Why? Well, the algorithms, the optimization algorithms improved here. But you might say, well, that's not, well, so that doesn't look that good. That's what's so impressive about that. Okay, well, you still did make money. You still made, $9,500, but there was huge swings and drawdowns, and that's what we don't want, right? We don't want the volatility. Okay, next one I'm going to show you is silver. So here's silver. I'm going to zoom this down so you can see that. Now this one is interesting because notice this one takes off in the beginning and then it just runs flat. It doesn't do anything. So you might be like, well, I'm not going to trade that because I'm going to trade copper now because copper's the one that's doing really good now. So I'm going to run to that one. I'm going to chase that one. That's not how it works, guys. You trade them all. If you run to copper, copper could start going into drawdown and then silver could start going up, right? And so this is what I'm talking about. Don't run for the rainbows. You trade them all. That's the whole concept of the portfolio. Now silver, okay? Look at gold. Gold is the best of them all, okay? So if you traded, this was and the reason I did 2 micros on gold is because they're not all the same. They're weighted weird. Like silver's weighted really high and gold's weighted low, but this is a micro. So if you did 1 micro on gold, you're up $8,500. Same as copper, but copper got there differently. Remember, copper got there like this at the end, just like shot up. So you might be like, and a lot of people, there's no way, look at this drawdown, 9,500 down to 4,000, right? That's huge drawdowns, right? So what we want to do is take these and combine them into a portfolio. Now, this is just an example. I'm going to have more. I'm going to have many different symbols. We can cross them over from different services. This is the breakthrough here. So I'm going to show you first, this is what this looks like combined now on a quarterly basis. This is each quarter going back from 2020, quarter 1, all the way up here. So you ended up with, it's a little bit over 30, whatever it is, it's 33,000, somewhere around there. Just trading 1 micro silver, 1 micro copper, 2 micros gold. Okay. This is what it looks like on a monthly time frame. This is what it looks like on a weekly time frame. This is what it looks like on a daily time frame. So put them all together. Now I realize there's still some drawdown here. Okay, it's just an example. But look at what you did. You got a much more consistent looking graph across time because you're not just chasing the one that's doing well at that time, right? You are combining these into a portfolio. You're always taking every signal all the time. It's a portfolio. Okay. So on 4 micro contracts, this thing did over $32,000. Okay, this is going back from March of 2020. This is when we started for the metals. Okay, so this is the first portfolio here. Now, the cool thing about this portfolio is that I can also give very detailed statistics here. I can get into profit and loss, starting equity. This is an example of silver. So silver does 15,000, all trades. It tells you the net profit, the starting equity, the maximum equity, the date of highest equity. It goes into all the ratios into here. You can get into gross gain amounts, return on profit per year, profit factor 1.78, Sharpe ratio 1.576. Keep in mind, guys, this happened. This happened. This is what you guys get every day with the newsletter. This is nothing that's a back test or anything. This is what was published. This is all published. Okay, the MAR ratio 6.264. The volatility, average trade profit and loss, $286. Average winner, average loser. Every statistic you could ever want is here, guys. This is why we have the portfolio visualizer now for you guys. Maximum loser amount, peak distance, median trade profit and loss, median winner amount, profit factor. Again, here it is. All trades versus, this is the median. Total trades, only 53 trades. Now, this is the thing I want to point out too. You're not hyper trading. This is 53 trades on a micro contract. This is just silver. That's not that much. There's $3 a turn on that. So you're talking about low commissions, right? So that's what this is. And again, you have access to this if you're a subscriber. Here's more information, the total trade duration, the percent of time in the market, 100%, because this is a portfolio. This is not, you're not a sniper. You're not like, I'm waiting for it to come here and then I'm going to enter here. And then, no, it's just, you're always in. It's always long. It's always short, depending on what the signal is. Average trade, standard deviation of capital, winning amount, standard deviation of losers. I mean, every statistic you could ever want is here. And we're going to have this available on the website. And it's going to only get better from here. We're going to keep posting more and more portfolios. So a lot of times people say, where do I start? There's so many systems. Where do I start? Well, look, the first thing I would tell people is start with the double lunar cycle. It's a very, I'm going to show that next. Those are even better. This was just an example of the Fed use. Start with that. But now you can say, if I would have traded copper, silver, gold, based upon the published results, this is what it would have done. So you're going to know that. So taking all of these systems and putting them together into a portfolio so you can see one portfolio. Oh, I want to trade that one. Oh, I want to do the gold, the metals Fed use. Oh, I want to do the double lunar cycle basket, right? Or whatever it is. This is where we've been going for years, since we started this back in 2000, right around 2008, we started this. This is the culmination of it now. We can actually visualize this stuff, and this is based upon published data that you guys get every single day and every single week. Okay. Now let's take a look at another example. So this is the double lunar cycle. Now by the way, I took the Fed uses of the metals. There are Fed uses of energy. There are Fed uses of currencies. There's Fed uses of cryptocurrencies. There's Fed uses of ETFs. I mean, it goes on. But what I'm trying to do now is to bring this together for you so you can see this as a unit. Okay? Because again, my focus is on developing portfolios for trading portfolios for large funds. That's my focus. So my research is always going to go in that direction. Yes, we do have the fast Fed big runs and all that stuff for the shorter term swing trades, but this is really my focus here, the portfolio stuff. Okay, so first I'm going to talk about S&P first here. So this is the S&P 500. This is what it's done. Sorry, that's not the S&P. That's all of them. Oh man, I missed the S&P somehow. Let me see if I can get the S&P over for you here. I don't know how I missed that. I'm gonna send it over in a file so we can add it on here, and then I'll show you the S&P. But S&P is doing very well, but it had a drawdown in there, which I'm going to show you. Give me 1 second while I load this for you guys, and we will look at the S&P first because that's a big one. A lot of people want to see the S&P. And so we're going to look at each of these separately and then together. So where's my S&P? Come on, here it is. Give me 1 second. I almost got it there. And then we will continue here. All right, I'm going to send this to the back, and we are ready to rock and roll here. Okay, all right. So here's your S&P. This is the double lunar cycle. This is what was posted to everybody. So this is what everybody gets. Everybody gets this at the beginning of the month. By the way, I'm going to post this from now on in the end of the newsletter each month, so you can see what would have happened if you would have traded the double lunar cycle. Now, there are other things going on with the S&P, the Fed juice, and longer term and all this stuff. It is pulling back. I do believe that the Fed is pulling back, but this is for shorter term swing trades. This is the double lunar cycle here. So this has done on one micro contract about $22,000 since we started this back in March. Okay, but here's the problem. Okay, and it's a big problem. There's big drawdowns in here. You can see here there's 14,000 here, and it goes down to 3,000. That's a $9,000. It's $11,000 drawdown into there. That's huge, huge, right? So this is the problem that I'm trying to explain to everybody, that you get to a situation where you try to chase an individual. You might have looked at this and said, well, I'm going to trade S&P because that's the best performing system. That's the best performing Fed juice. And the minute that you go and chase it, it has the drawdown. And then, people get into all this negative self-talk and be like, oh, this always happens to me, and and all this stuff. It doesn't always happen to you. It happens to a lot of people. And this is the problem when you get into all these head games that people get into themselves and they get down on themselves. But you might have seen the S&P doing this and you're like, well, I'm going to really start following this. And then it has this huge drawdown into here, right? Oh my God, I always choose the wrong one. No, you don't. This is natural human instinct to chase this stuff. When stuff starts doing well, that's when it has the regression. And then look, but then it recovered. So then a lot of times people, they take the hit and then they don't stay with it, right? And so this is the problem with systematic trading, because if you're when you're down, there's this phrase that, there's another train coming down the track, right? So when you get down, here's another train coming down the track here. And so what we have to understand is that to catch this next train coming down the track, you have to be always in to these trading systems, and you have to believe in what they're doing. Even if it looks like, oh my God, this thing is doing nothing at this point. It looks like it went all the way back here. Look what it does. And so the reason why it does this is that when it took the loss, the volatility was expanding. So when the volatility is expanding, you can make money both to the upside and to the downside. You can lose money to the upside and to the downside. But the point is the losses become bigger, but the gains become bigger, right? But some people might say, well, that's great and everything, but that's too much volatility for me to handle. I don't think I want to deal with that, and I understand. Some people, I don't know, some people trade this with stops and with options, and they just roll right along with it, but other people no. So let's look at some other double lunar cycles here, and we'll see how these look, and let's see if we can smooth some of this out here. So the next one's going to be Bitcoin double lunar cycles. So here's Bitcoin. This one has been pretty consistent throughout. We really haven't seen too many. We had this big dip here. Now notice a lot of these did dip here. This was in like July. This is when I updated the algorithm on this, and they all just took off. I figured out how to optimize this double lunar. It's actually a triple optimization now, but this one has been pretty smooth. This is Bitcoin. Okay, and by the way, you guys have these at the beginning of the month. Let me say that again. You have all these traits at the beginning of the month. It's published. You don't even have to look at a moving average or support or resistance, nothing. It's like it's in the newsletter. Okay, these are all published in the newsletter. You can go back and look at all these. Okay, here's the next one. Now, here's a 10-year bond. So this one is similar. You see a dip here. This is trading one micro contract. Okay, this is a 10-year note. Sorry, 10-year note. It has a dip here. You see this dip? It looks like it's doing nothing. This is why I'm trying to tell you, if you tried to be Mr. Smarty Pants and say, I'm going to just choose the best trading systems and I'm going to follow, that's not how it works, man. Because here's what it is. You get too smart for your own good. This trading system looked like it wasn't doing nothing at this point, right? Why am I even wasting my time with this? I've spent 4 months here and I'm back to zero. But then look what happened. And the same thing happened, if you go back with copper, the same thing happened with copper. Look back here at copper. It looks like it's trash. In other words, it looks like you're like, why am I wasting my money with this when I could be putting it my capital to other use? This is trash. No, it's not trash. It wakes up and it starts making money. This is why the portfolio, you have to stay in them all the time. You cannot run to chase the rainbows, because when something's in the gutter, that's when it rallies. And you have to be in these all the time to understand that, to catch that. Okay, so I just want to point that out. So getting back here to the 10-year double lunar here, here's your 10-year double lunar, pulls back, and then a huge run here. Okay, but again, there's volatility in there. So what we want to do is we want to combine them. So here's what we're going to do. We're going to look at this. This is the combined double lunars. If you traded, this is a portfolio. Okay, so this is a portfolio, which means that you are always trading these on these symbols. So this is a portfolio, because again, this is what I do, guys. I write algorithms for large portfolios, okay? And now we're combining them when we're at this point. So this is a portfolio for the S&P, for Bitcoin, and this is a portfolio for the 10-year note. All right, this is trading 1 micro contract of S&P, 1 micro contract of Bitcoin, 1 micro contract of 10-year note. This is what it did on a quarterly basis. You see it starts to smooth out, but I'm gonna zoom in. You're gonna see there is still drawdown into here, but this is very different than I'm gonna be a sniper. I'm gonna wait till it gets to the resistance. I'm gonna go to here. No, you're just always trading these all the time. That's what it is. It's pretty boring. Pretty boring, right? But the point is for it to make money and with as least amount of risk and the least amount of drawdown as possible. Okay. People can be too smart for their own good, like they can't. It's just it's human nature. I'm going to outsmart everything. I'm going to pick this. No, you try to go to the system that's the best. That's when it pulls back. All right, here's the monthly. Here's what it looks like. Here's the weekly. Now notice, interesting thing here. When you combine them, even during this choppy period, there wasn't that, the drawdowns kind of disappeared, right? Why did they disappear? Why did these drawdowns disappear even during that period? Well, take a look. They had different drawdowns the S&P had a drawdown at a different time than Bitcoin, and Bitcoin had a different, I actually was a little similar to the 10-year into here. But the S&P looked a little different. That's what you want. You don't want them all drawing down at the same time, right? And that's why we diversify. That's why we put many symbols into a portfolio. That's the whole point of a portfolio, guys, to lower your resistance. But this is long and short trades, guys. This is not just I'm trading long all the time on the market. Oh, Bitcoin's going up, I'm long. S&P is going up, I'm long. No, this is long and short all the time. That's what I'm trying to tell you. This is so powerful, because if the market turns, it doesn't matter. It doesn't matter. It doesn't matter what the market's doing. Okay, so let's get back into this. So we get into here. Here's your weekly. Now notice it does take off here. This is when the algorithms start to get better, the optimizations start to get better into here, and it takes off. But the point is, if you combine them, your volatility you're still climbing, even with this lower, optimization method. You still were up almost $20,000 here on 3 micro contracts. So, that's the whole point of this, to lower the volatility. So this is what it looks like on a daily basis here. When you put them all together, this is the portfolio of these 3 that we talked about. So again, this is the daily output of the portfolio of the S&P, Bitcoin, and the 10-year. And this is each 1 micro contract of each. Okay, portfolio always in, just taking the trades. Double lunar cycle. You guys get this at the beginning of the month. It's published in the newsletter. This is how it went down, exactly how it went down. Everybody has these signals, okay? Everybody. That's the whole point of a newsletter. I just send it out to everybody. Everybody gets it. This is not some special trade, special trades that only some people know. No, everybody had this information in the newsletter, okay? And it's going to start to this may be a different way to look at it. You guys might not look at this like, wait a minute, I'm buying in support and resistance, and I'm doing, tight stops and limits. This is different. This is a portfolio where you're going to diversify by trading small on each position, and you're going to have multiple symbols trading. So it's a different way to look at it, but we're going to keep coming back at this each week. And each week I'm going to have a different portfolio. I'm going to mix them up. And notice I purposely did not put in, I'm not trying to cherry pick and put in like the best, just the best symbols. We saw back here with copper that copper looked like caca all the way here for a while, and then it takes off. And silver looked great in the beginning, and then it went flat. And gold, this steadily kept climbing, but you put them together, and then you get a nicer looking profit curve. And again, the double lunars are looking even better than the Fed uses, but that could change, and you can mix and match it. I mean, I'm going to put together a portfolio with for the metals. Like for example, I had the metals Fed juice. I'm going to put together a portfolio that's metals Fed juice and metals double lunar. This is so simple to do these trades. Like they may come once every 10 days or something. They're in the closing bell. Like you're not sitting there stressing out, looking at charts all day. This is pretty simple stuff. But it's meant to be traded always in. So that's how this works. It's still not without risk though, guys. I mean, there's still drawdowns in here. The ideal is to reduce the drawdowns, and I think we did, but you still got drawdowns in here. There's still drawdowns in here. So it's not like this is without risk, but if you're trading like ETFs or stocks, you can trade as few shares as you want. You can trade one share if you want, right? There's no more commissions on the stocks and ETFs. So we're going to be going in this direction with the stocks and ETF service too, but that's still building across time. This is the stuff that I really have the data for the metals and for the double lunar cycles and all this stuff. And we're going to be moving in this direction for every service that we have. And again, this has the statistics here, the net profit. This has all this stuff that you can check this out. You can go to the website and see this if you're interested. So I know this is a different way to look at things, but I think you might want to consider it. You might want to at least consider the concept of it because there's a lot of information for you to put to use here with your subscription. So this is just if you're a metal subscriber. This is how this looks if you just trade the Fed juices. We also have dollar juice on the gold. We have the double lunars, but this is like combining it now together into one package. I'm just going to trade copper, silver, gold, Fed juice. This is what it does. Okay. On micro, and these are tiny. These are micro contracts. This is not the full contract. And you could do it with ETFs too. I mean, you could trade copper ETF and gold ETF and silver ETF. You could do it in different ways, but this is the system that it was optimized on. Okay. All right. Any questions about the portfolio stuff? Anybody? Okay. We'll keep going here. So S&P. So I'm going to talk a little bit about the S&P. Actually, let's talk about the taper before we get to that, because yeah, taper's coming. They actually did post it now they actually logged it. They're going to reduce the treasuries from 80 billion to 70 billion. So it's starting, guys. The chokehold is starting, and it's just going to get more and more severe each month that we go. As the Fed has been relentless with trying to keep this thing up as much as they can within the constraints that they have to work with. They have to taper. It's going to happen. And so, yeah, that's just what's going to happen. So once we get a couple months into this, you're going to see this really start to strangle off here. I think once we get out into this late January period, into this February, you're really going to start to feel it. And it's going to it's cumulative. It's going to be worse and worse and worse. It's not like they're just tapering once and then they're going to wait for a few months. No, each month, more and more and more and more. Unless they get some kind of a shock or something where they say, well, we're not going to taper. Now, we could have a new Fed chair. Who knows what's going on over there? I thought Powell did a pretty good job, but I'm not the one making the choice. So it's really up to the president to pick that. That could affect markets. They may not like it if they pick a new Fed chair. So, that's all into the mix. There's a debt ceiling coming, guys. I hope you don't, that's coming in just like 3 weeks. Still out there. There's all kinds of crazy stuff coming up here, guys. So, yes, we are in a holiday seasonal this week, but doesn't mean that the market has to go up. This was the taper schedule here. So 120 billion per month, 80 billion in treasuries, 40 billion in mortgage-backed securities. Taper, they did start to mark this. Now, I was looking in the, it's a lot harder to find with the mortgage-backed securities because they give kind of ranges on those, but they posted it in the treasuries. It's happening. It's happening. So, yeah, you're going to start to see headwinds develop very quickly. Double the rate of previous tapers. Okay, so just let you know that's out there. It's coming. It's real. It's serious. The banks are puking. JP Morgan, Bank of America, puking, going straight down. Okay, it's not good for the markets. Just letting you know that, especially not the banks. They don't want higher rates. But all right, I do want to mention the lunar eclipse. I did talk about this on Larry's show the other day, and let me mention this here. So let me talk about this lunar eclipse. This was kind of a funny story that I gave on Larry's show, but lunar eclipses are like the great attractors, right? Sometimes any transit can be an attractor, like it just draws markets up into the very last second. But this one is supposed to do that. Like if you look at the statistics of it, the S&P goes up into eclipses. So I'm going to show you, this is a statistical run here. I'm not showing you the full graph because it's for subscribers, but it does draw it up into the eclipse. That's what this is. And it does fall in the days after. And I'll give the specifics to the subscribers. It's supposed to do that. Okay. It's not just like a wise tale that you read. And no, it's like, these are the statistics. Like if you go back through the history of the S&P, it always goes up into the lunar eclipse. This one was strong because of the amount of time that it lasted. It could be historical for all types of different reasons. Proximity to the earth, spherical angle. This one just happened to last a long time. Okay. And now that's why this one was a big deal. But full moons are exclamation points. So when markets go up, full moons tend to be tops. Okay. So the reason is that when you're talking about a cycle and you're in a bull, typically the new moons start the start of a cycle and the full moons mark the end of a cycle. Now you might be saying, well, that's what people say. I mean, is that really true? That's what it says in the astrology books. And the answer is yes, it's true. We did statistical runs on this in the book, A Trader's Guide to Financial Astrology. It's true. When the market's going up, the full moons tend to be the tops, the new moons tend to be the lows. And when it's going down, it's the reverse. So the tops are new moons and the bottoms are full moons. That's verified in the book. We talked about that. So it's not just something that we read in the astrology book. It's actually true. A lot of this stuff is, when we went back and started testing all this stuff, most of this came out to be true, like Jupiter, Venus, positive, Saturn, negative. All of these traditional planetary meanings, they came out to be true for the S&P. Probably because the S&P is the biggest collection of psychology of people that you see in markets. So it tends to reflect the psychology, and the meanings of the planets tend to come out more with the S&P. But here's the point that was kind of interesting. The eclipse occurs at 27 degrees of Scorpio and Taurus. So Larry has his ascendant at 28 of Taurus, and my ascendant is 26 of Scorpio. So we have our ascendant and our descendant locked, Larry and I do. So we see the world as this through the same lens. Like we have a similar attitude, a similar look, a similar everything. It's weird. Our charts are linked. But this eclipse was coming right between our ascendant and his descendant. So he was given this webinar and he was talking about how everything was going wrong and the computer and all. Well, that was the eclipse. I was feeling it all week. It was, and your ascendant is like people that are around. It's your exterior. It's everything you come into contact with is your ascendant. It's your environment. It's your exterior appearance, but it's other people. And so the night of the eclipse, I was driving to my daughter's skating with my wife, and I was in her car, and all of these, I mean, I almost got into like little accidents. Cars were cutting me off and being aggressive. And I said, this is the eclipse. I can feel it. This was the night of the eclipse. I said, this is not me. I'm driving pretty chill here. And I was telling my wife, and she was like, no, you're driving my car, because my other car was in the shop. She's like, you're driving my car. You're just not used to it. So we get to the skating rink, and I'm sitting there, and I'm just like parked. And this car comes up out of nowhere and just swerves in front of me and almost hits me. And the lady gets out and starts waving her hands at me. I'm just parked. I'm not doing anything. And I told my wife, I'm like, it's the eclipse. I'm like, you want to drive? I don't want to drive anymore. But the point is, eclipses are oppositions. So when you're talking about a full moon, you're talking about, the sun. You're talking about the sun, the moon in opposition, and it was like that's how it was manifesting for me. Like people were taking oppositional roles to me, and I had some confrontational things going on in the week that I normally don't have. Um, but that's what that's supposed to mean, and that's how it played out. So I just thought I would mention that. It was just a little interesting story. The fact that the eclipse happened right on my eclipse, or right on my ascendant, so it affected me, or the people around me, the surroundings. But anyways, getting back to the S&P, these are supposed to be attractors for the S&P and then negative after. So eclipse is supposed to draw it up and fall. So the markets rallied almost exactly into the eclipse. If you go here and look now, keep in mind there's no Fed overnight, except for the fact that we have this international repo facility, which suspiciously started increasing market activity overnight. That's a different story. But for the most part, there's no Fed overnight like there is during the day. So this was the chart here of what actually happened with the eclipse. It actually came almost exactly into the exact moment of the eclipse, and the market turned lower. It was like almost the exact minute. But keep in mind, guys, this is what it's supposed to do. Like if you study the statistics of this and go back, that's what it's supposed to do. It's just during the day, the market gets so manipulated, it's very hard to see. And the minute it starts to drop, it gets mysteriously shored up all the time. So, I follow the larger term dynamics of the Fed, but when you talk about it overnight, you get a little more, the rhythm is a little more natural in terms of the flows. And yeah, it came almost to the exact minute here. It was like within just a few minutes, it turned, right? So then this was the European COVID scares and lockdowns. Um, and that's interesting too because COVID is kind of on a plateau. I don't know if you saw this, but the COVID graph was falling, but it kind of plateaued right here, and it looks like it's ticking back up. Michigan they're at the highest cases that they've ever had, ever in COVID. So this might come back into the headlines. These pandemics tend to last. Like if you go back and look at the Spanish flu, all this stuff, they last for like 5 years. Like with the different waves that come in and out, come in and out, come in and out. So this is something that's probably going to be with us for a while. But I just thought I would mention that. So anyway, so yeah, so it's supposed to fall. So that puts the S&P in somewhat of a negative profile. Fed internals did come right up into this channel like I thought it would. I figured it would come up to the channel and turn back, and it did. So I don't see the Fed continuing to ramp these internals up. I think that the taper is going to start choking this out as the balance sheet starts to come down, and I think that you're going to have some issues. I think you're going to have headwinds for sure. I'm not going to get into the details here with you guys in terms of the specific dates and everything, but I still think we have issues here, guys. We have issues. So just be careful. Be careful out there. Understand too that everything that you see here, I want you to understand that when the banks go into these holidays like this, and you get these big dips like this with the Fed, you notice that the market dips right with it. You see that? You see right here when they had the banking holiday here, what does the market do? The market dips, and then they ran it back up again. See this? The market goes up here. But keep in mind, the market was not able to go as strong and as fast this time, even though they tried to push it back up. So that's so here's the thing about this. This is the short-term story of what's going on. They're in this frantic mode to try to make up for the banking holiday, and they did. But the longer-term story is this. This is the longer-term story. And that's what I talk about when I say the Fed internals are decreasing. That has not changed. You can say all you want that the market's there and it looks like it's going to break out. It's not going to go anywhere without the Fed. It's just not. Based upon the history of what I've seen since 2009, markets can't go anywhere without the Fed, and the Fed's going to pull back with the taper. So just be careful out there, guys. This stuff can change quickly. Markets can rise fast. They can fall fast. We saw how, look, nothing, look how fast the markets fell into here. Look how fast they rose into here. They can go both ways very quickly. So be careful. Don't assume that what is happening right now is the same as what was happening 6 months ago, because it's not the same thing. This is not the same thing here versus what's going on here. We have a totally different economic environment, political environment. we might be changing Fed chair. All this stuff is coming into the picture here. So be careful. Oil, we have been having some really good forecasts on this. I've been talking. I know a lot of people have been calling oil tops. I know that, but we did too, and we caught it pretty good here on 11.3, 11.9. We've had both of these now headed lower, and yeah, and the thing about oil is that this is the one that's going to take the S&P down, guys. S&P is going to they're going to go together eventually. So I don't know. I just think that in the beginning, I think all of these look like crap. To be honest with you, I think they're all looking very dire. I think the S&P is a lone standout at this point. I think they're all looking pretty scary. Even crypto, gold, oil, S&P, they all look pretty scary to me. That's just me, but that's my opinion. But we've only been taking short trades on those big runs for a reason, because they're going down. And so that's why the big runs have been doing so well. Getting here, this is the banks puking. As I talked about this, this is a terrible sign, guys. When you see banks collapsing like this versus the S&P, this is not a good sign. This is not a good look. You see the S&P up here like this, and this is the relative strength of the banks here. They don't want the taper. They don't want to deal with this stuff. It's not good for their business. It's not good for their bottom line to have tightening monetary policy. They know it. This is a warning. And I've been talking about warnings. I felt like Tesla was the first one. This is another warning for you guys that this is serious stuff. This is serious stuff happening behind the scenes. You need to pay attention. And don't get caught into the concept of, oh, it's back up into the bull because it was over here. No, it's a totally different picture now to what we're looking at. Don't compare what's happening now to what happened 6 months ago. It's different. Gold miners has continued to outperform. It's the best. By the way, I did not even put gold miners into that Fed use portfolio. There's more to put. I'm going to put more of these Fed uses into that portfolio. You're going to see the portfolios we're going to build are going to be solid. But this one's in a sell too. Gold's in a sell on this. I mean, there's trouble brewing here. So holidays are here. Everybody's happy, jolly, whatever. But I'm just telling you, if you look a little deeper into what's going on around this, scary. Scary. All right, Cardano here. We've added this now. So Cardano's colors are blue, gold. So I try to like mimic the colors. Fed use is in a sell on this. And so we have the Fed use now on this. So for those of you in the crypto, you'll see the Fed use here. Now we're going to add a little bit at a time. I'm going to add the double lunar cycle. I'm going to add the statistics, all this stuff, guys. I'm going to add it. But this is the first step. Everybody wanted Cardano, Cardano, Cardano. Okay, we added it. I don't have a lot of history on this. It's a short price history to begin with. I just started trading it, so I won't really have too much to offer in terms of the portfolio analysis on Cardano like I did the other ones. For those of you just joining us, I'm Shane Smoleny from Wolftrader Futures, and we talked today about a lot of stuff. We talked about the portfolio analyzer on how to put these different trading systems together into a portfolio so you can look at everything as one portfolio, everything from the Fed use to the double lunar cycle. These are Fed uses of the different metals. This was the double lunar cycle here. And then we went in and we talked about what's going on with the S&P and the taper and the lunar cycle and things like that. So I'm going to go through a few question and answers here, and then you can go into some specific questions. If you guys like the video, go ahead and like and subscribe to the channel. It helps us out with the algorithm. If you want to get notified, this is the first question because I got more emails again this week. We're getting more people signing up. How do you get notified? So the best way is to go to YouTube and click the bell, the subscribe bell. Twitter, guys, sign up for the Twitter, follow on this, because what I'm trying to do is I'm trying to give you a flavor of what's going on in the week with these trades. Now, I'm giving delayed information, okay, because I'm not going to, this stuff is for platinum subscribers and things like that. But when a trade is on, if it's already en route to being a trade, I'm kind of trying to post this to give you a flavor of what is going on over there in the platinum section. If I'm trailing stops, like sometimes on these fast fed big runs trades, it's like a long phrase now. I'll trail them in, but this is an example. So this was like I posted this on gold. This was the short signal here. This took off here. This was Bitcoin. This was the short signal here. It took off here. This was oil. The short signal was here. It took off. Now, a lot of times I get in there and I start trailing those stops. Like you guys have seen that. I get like, it could be like 10 o'clock at night and I get up on Twitter, like, let's go. We gotta get aggressive on this and trail this in. This time, not so much. I think that we've got some big problems here across multiple markets. I'm pretty happy to let these go out. Now, if we get within a day of the trade ending, I'm going to start getting aggressive trailing the stops. But right now, nah, I think we're in trouble across multiple markets. So it was just like this was a really good week for the big runs, the best week we've ever had, going back to the history of Wolftrader. So it was a good week. I mean, they're not all going to be this good, but this week was good. So the point was, go to sign up for the Twitter at Wolftrader FUTU1. Go there, man. Sign up. You'll get those tweets. They're going to be delayed. I'm not going to tell you like right when the trade starts if you're not a subscriber, but I am kind of throwing it out there saying, oh my God, here we go. Like this week was just like every single trade. It was like just took off running into profit. Well, it felt like there was two small losers, but they were small. But anyway, and I'm not going into specifics here, guys, in terms of those trades, but they're you get the idea. Email updates, there's a free email list you can sign up for. The S&P closing bell, I do talk about this in the closing bell. I know we're getting near an hour here, so I'm going to keep trying to speed this up for you guys. 7-day trial. If you guys want to start a 7-day trial, you do have to create a PayPal account. You have to go to the website and create an account on the website, and then you sign up through PayPal. Now, the reason about this is that there's a permissions that happen on the website. So when you sign up for the free subscription, it gives you permissions on the website. And I've got a lot of people signing up and moving around. So it's just much easier this way. And, I mean, there are exceptions where I can give people special access if something happens with the account or something, but it's just much easier because the permission, you come in with the permissions and it tells you, okay, you sign up for the metals, you can go to the metals page, or you sign up for the gold, you can go to the gold page, or whatever it is. So that's why it does it. If it doesn't, if there's a problem, PayPal is actually really good. I can get in there and issue any refunds or anything that needs to happen if there's an issue, but usually there's not. With all these indicators, where do you start? Okay, so here's the question again. I'm going to update this a little bit this week. Last week I said double lunar cycle. I still believe the double lunar cycle is a great place to start. It's simple. You have the trades at the beginning of the month. I showed you the profit graphs. So for example, you saw the portfolio, but we also have the portfolios. So I showed you here, this is the portfolio of, this is where if you just took, now these are different services, but if you took S&P, Bitcoin, and the 10-year note and traded all of them, this is what it did as a portfolio. Okay, so I'm going to have portfolios now to help you it's just a way to help you group together the different trading systems. To say if I took every trade of these trading systems, what would it be? It's a portfolio. It's not a sniper trade where we're waiting and plotting and scheming. It's just, you're just taking them all the time. Where do you find the double lunar cycle? On the monthly newsletter. So you go to the monthly newsletter or the daily charts. Each day I post them on the daily charts and then also on the website. If you go to the website, if you're a gold member, there's a place on the website where you can see the double lunar cycles on this website. And I'm going to show you now what that looks like. So here's the gold member section here. So if you're a gold member, this is what it looks like. Gold members and platinum. Platinum is gold plus Twitter, but and the big runs. But you get S&P metals, energy, currencies, cryptocurrencies, uranium. Closing bells. This is the daily updates. S&P metals, energy, currencies, cryptocurrencies, grains, financials. This is where you would find the new grains and financials. So if you click that, what it does is it just takes you to the closing bell of the grains and financials. And okay, the question was the double lunar cycle. Okay, so you would go here. So if you're a gold member, this is October. This is last month, but they're all here. So 25 different markets right now. We'll be adding more. We'll probably get up to 30 markets soon. It just takes time to do these, and I don't like to just add something to add it. Like it has to make money. It has to be to work. It takes time. I add them slowly across time. We will add Cardano soon. We have copper, silver, gold, platinum, corn, natural gas, oil, heating oil, gasoline, US dollar, Canadian dollar, British pound, euro, Japanese yen, Australian dollar, euro dollar, Bitcoin, Ethereum, Ripple, Litecoin, 10-year, S&P, Caterpillar. Um, we did add Apple. Apple's going a little crazy right now, but we added Apple. Cardano's coming. So there's more coming here, but that's where you would find them if you're a gold member. But yeah, they're everywhere. Like they're in the newsletter, they're there. So my mission is to really just share with you guys the results of these, how well these are doing. They are doing well. They don't all do super good. Like we saw with copper. Copper did a year where it just kind of did nothing on the Fed juice here. Um, this was the copper here. It looked like it was doing nothing, but then it takes off, right? And so when you put them all together and you get a portfolio, then you start to get like how it truly looks across time. So you got to look at them all as a whole. You can't just look at one trading system because every trading system is fallible at some point, and that's what we want to do. Okay, next question. So we talked about Fed juices with that portfolio. Where do you find the Fed juices? Well, closing bell. Closing bell is the Fed juice each day, and this is where you find them on the chart. So if we go here, I'm going to give you another example here. We're going to go back to the gold section here. So let me show you. So here's where you find the Fed uses. So um, let's just go to metals here first. Let's go to, I guess we'll go to metals here. So we'll go to metals. And so on the closing bell, each day that you get the closing bells down here, it says it right here. What's the Fed use direction here? And it tells you if it's changing, like you'll know. You can also go to the chart here and you can see the Fed use. So these red arrows, you see how long it takes for a trade to happen? This could be 2 weeks. This is almost a month. So when I talk about creating a portfolio for this, like it's super, like it's not that hard. Like you can see when the signals change. They're on the chart here, and then they're also on the closing bell here. So you'll see them in both places. And then that goes back to what we talked about earlier with the portfolio. So those signals on the chart, just to link it in your head, those signals, those red arrows is this combined profit graph here. That was for copper, silver, and gold. If you took every trade all the time, that's what it would be. No stops, no limits. You're just following the system. That's it. It's a portfolio. I know this might be weird for you. It's new. You're not used to seeing it like this. You're used to being the sniper and being in and out of there and all this stuff. But this is the point of what I'm trying to do. I'm trying to create trading systems for larger portfolios. So larger portfolios move like slow ships, right? Like cruise lines. They just slowly kind of move around, and it's harder to change things. So feel free to do whatever you want. I'm just showing you um, how it's designed, why it's designed the way that it is. So anyway, so S&P trading logs are located here on the S&P. I am going to be putting more. So this is important. I'm going to start putting portfolios on the pages here. So when you go to the page here, you're going to see, I know this is getting long, guys. I'm finishing up here. You're going to see S&P logs, but you're going to see portfolios. So you're going to see like S&P, gold Bitcoin portfolio or Fed juice portfolio or whatever it is. You're going to start to see those here, so you can understand how to combine these systems in the best way. People ask me about the positive seasonals real quick. Usually we are in a positive seasonal. Next week is typically positive before Thanksgiving, but we are after that eclipse, and the market, everything around the market is like it's kind of eroding. So we've seen times when the Fed pulls back that the seasonals can be negative. So yeah, what is the taper timeline? When will the markets feel it? People ask me this all the time. I think once we get into late December, January, it's going to really start to feel headwinds here. So we're going to end on that, guys. Thank you so much for coming today. I'm going to try to answer any questions. Hi, Shane. Okay, I'm going to read some questions now, but let me just summarize here. This was a very important week for Wolftrader. For all the Wolftraders, the subscribers, this was a breakthrough week. We had breakthroughs in the big runs. This was the most profitable week in the history of Wolftrader for the fast Fed big runs. It was a very good week. They're not all going to be this good, but it was a good week. It's a good sign. We're going in the right direction. The next thing, too, that I want to point out is that this is a big week because we finally now have the ability to look at portfolios with the different Fed juices and with the different double lunar cycles. So if you are a subscriber to the metals, if you are a subscriber to the energy, if you are a subscriber to the currencies, you're going to be able to see if you put certain Fed juices together and always traded them, what would your portfolio look like? That's huge, guys. This is the point to where I've been working towards for years. I've been trying to get to this point for years. We're finally at this point, and so everybody has this ability to do this if you're a subscriber. So I just want to emphasize this, and this is why this is such an important presentation today, because what we're doing now is we're getting closer to my vision of what I want the service to be. Okay, we're getting closer. I mean, again, my goal is to always just be a little bit better each week. But I think this was a huge week. This was a huge step in the right direction. And so I'm going to do my best to try to communicate to you guys um, how this works, how to put the pieces together, and what you can expect if you do put these pieces together. All right, so just closing with that, I just want to say again, if you want to sign up, you can go over to wolftraderfutures.com plans pricing. There's a 7-day trial there. Check it out. You have nothing to lose. You'll get a month newsletter if you want to check it out. If you go there, Shane at wolftraderfutures.com, www.wolftraderfutures.com or fedjuice.com. Remember, guys, we have a U.S. trademark on the Fed Juice. We're the only service that has it. And I've gone through deep lengths to try to secure this and to make sure that we are communicating clearly to you for everything from the property rights of this all the way up to how to apply it to your trading plan. So we're serious about this, and I feel like I said, I feel like this was a really good week. YouTube, you're on the channel now, Wolf Trader Futures, and then Twitter. Head on over there and follow Wolf Trader FUTU1. Again, you're going to get a little bit of a flavor in terms of how we follow this. So I'm going to read a little bit now, some questions that people had, and then if you have any more, I will try to answer them. But it's getting long here. I know these streams, I'm trying to keep them to under an hour. But okay, so somebody asked me, how will the Fed appointee affect the markets? Hard to say. I think if Powell remains, it will be positive. It's really a wild card if they change Fed chairs. I thought he did a good job, but I'm not the one making the decision. Okay, so I don't really know. With Asia troubles, you anticipate global capital flowing towards the United States. Hard to say. I see many markets right now falling outside of the S&P. I'm more concerned about global markets right now. I think that the taper is going to have a deflationary effect, and it's going to be bad for all markets. Let me read some more questions here. I mean, eventually, guys, I think if we do get some type of a panic, certain markets will come out of it, like rise like the phoenix out of the ashes, like maybe crypto will rise out of it or gold will rise out of it eventually. But initially, I think if there's a scare or a deflationary scare, I think all markets could fall together initially. And then maybe, maybe gold does eventually come out of it. But I think the initial shock of this could be so severe that everybody just runs from all markets. And so that's kind of what I see right now. And that's why we're only taking short trades on the big runs right now. So, and we're doing pretty good with it. We had a good week. Please show the big runs, Gary. I spent a lot of time showing the big runs here, but what I'll do is I'll just show a few slides here. I didn't show the actual trades, but just we had multiple trades here this week where we had record trades this week, record profits, the most that I've ever seen at Wolf Trader trading the big runs. So yeah, you can go back and look at the video. I talked a little bit about that, but let me see if I can read some more questions here. Bond up, guys. The bond. It's a scary topic because I don't think the Fed can let the bond fall too much longer. So it's tough, man, because the Fed is essentially long the bond right now, and I think most people feel that the bond market's going to fall, rates are going to rise, but I don't know. I just think the Fed has a trick up their sleeve all the time with this, and they tend to figure this stuff out better than everyone else. I don't know. I'm surprised the bond market hasn't come down more, but we don't really know what's going on behind the scenes right now. It's hard for me to imagine, to be honest with you, a huge bond market sell-off with the Fed in there. It's just hard for me to imagine with the Fed long the bond like they are. Hard for me to imagine, but if the bond market starts to fall, you could start to see some very severe systemic problems. So I don't know. I don't know if they'll let it fall though. I really, I mean, I'm not in that camp of like super bearish bonds. I'm not. I just don't think they're going to let that happen. But if it does happen and they lose control, I don't think that would be good. Last question here. Do you find trading overnight you get better signals? Good question. Yes, the futures give better signals, and so this is why I like the futures. Let me talk to you about real quick. Well, I guess I'll just explain it to you. We have different trading times that we use. So, for example, I use the outcry times. So, like copper's 1 o'clock, silver's 125, gold's 130, corn is 220, natural gas and oil is 230, currency's 3 o'clock. That's when it ends. I tend to find that when you use the outcry times, even if they're electronic now, you get better signals. And trading overnight, yes, I do think. Now, let me just say something else about that. If you trade regular market hours during the day and you could set the futures, I could set the futures to open at 9:30 and close at 4, and it trades fine too. That's that, and it's weird because that creates like its own separate set of trading signals. But I do find that when you let it go overnight, it does give better signals. Uh, Now that's for the daily time frame. I'm not talking about intraday. There are certain markets that fall asleep at night, and it creates horrible intraday trading situations. For example, natural gas is one of them. If you set up intraday trading systems on natural gas and you try to include the overnight session, you will get horrible results. Because what happens is it kind of goes to sleep and then it wakes up in the morning. The euro's weird too. The euro wakes up at 3 o'clock in the morning. The yen wakes up around 10 o'clock at night. So um, I'm talking about end of day. End of day, it's better to use them all, but intraday, not necessarily. If you're going intraday, sometimes it's better to make smaller time frames. Like sometimes it's better just to make, if you're going to do intraday, from 9:30 to 4. If it's like if it's intraday day trading, sometimes. So certain markets you could get I think the euro you could get away with it because it trades so internationally. But things like natural gas, it just like runs dead all night and then all of a sudden it wakes up. And so you're taking all this data into account of a market that's like dead overnight and then it just comes to life. So it's highly individualized. Um, the Japanese yen, I do find that if you're doing intraday trades, if you change the closing, I set it to close at 3. Okay, I set all my currencies to close at 3, but I do find that the Japanese yen, if you set it to close around noon and open around 6 at night, but close it at noon, it gives a little bit better intraday signals. This stuff is all nuances and weird stuff. I don't like again the portfolio stuff that I'm talking about is the longer term swing trades. But I have done a lot of work with the intraday stuff. So yeah, it does. To answer your question, um, I think it gives you better signals for the daily signals. Intraday, it depends on the signal. Um, Things like the euro and the S&P, you could probably get away with it. Other symbols like sometimes the grains or natural gas, it kind of screws up the signal because the nighttime is so different than the daytime. So you really need an international type of a market that's active all throughout the night to get good intraday signals. So hopefully that answers your question. All right, guys. I've taken a lot of time here on your Saturday. First of all, thank you so much for coming today and watching. This was really an important day today to share with you all of the exciting information that's here. And so I want everybody here to have the most success and maximum potential. I wish everybody, all of your families, wealth, health, and success, and happy Thanksgiving. This is the time to be thankful for what you have. I'm thankful for all of you for coming here, for the subscribers, and take some time and spend it with your family. Enjoy the week. Take some time off, and we will see you next week. So thank you so much for coming, guys. And with that, I'm going to uh, log out here. But again, thank you so much. I am thankful for all of you for showing up and for subscribing. And we will talk to you soon. For those of you who are S&P subscribers, I will have a video tomorrow with some more detailed turning points. And we will talk a little bit more about these portfolios in depth. But that's basically it, guys. So have a great day, and I will